All right, traders, this is Blake Morrow, and you are listening to the daily Roundup webinar. Hope everybody's having a great trading session. So real quick, let me turn this volume down to my office. Just stand by. The S&P is right back up against its highs. You can see we're nudging right up against the highs. I still think that we're going to test the 161% extension of this move, which comes in at 34.12. So it seems likely that we're going to, try to make a move above there, especially with the momentum that we got in the dollar yen. So let's talk about this move in the dollar yen really quick. I was actually going into today, I was short, and I had my stop right here, right above like 110, 5 is where I had my stop, and then boop, I got stopped out. Today, I played it on the long side when we were down at like 110.60 up to like 110, 70 something. Nothing to write home about, but I've left it alone for most of this move because it was such a big move. Now, I was actually hoping we'd come back down, retest 110.20, 110.30, and then make a, be able to get long down there. That didn't happen. So it's amazing how the narrative, and this is something that I was talking about in our chat room, how the narrative has changed with the U.S. dollar Japanese yen today. Big technical breakout, right? And let's look at that technical breakout really quick. So you're looking at the daily chart. Keep in mind with the dotted trend line. Okay, big breakout, multi-year breakout, big consolidation, and we broke higher. Japan, really poor numbers this week for GDP. The market's expecting that that the coronavirus is going to hit Japan a little harder and really cripple its already weakened economy. The fair arguments, and I hear what everybody's saying. The yen really hasn't been a funding currency, so the yen, the yen weakness is warranted. The dollar yen or the euro yen or the Aussie yen, they should be rallying because you're not really getting a carry premium too much if you're, buying other currencies, selling yen. So in this environment with stocks going higher, the yen should break down, and it should not strengthen if stocks go down. Okay, I hear everything that everybody's saying. And as far as I'm concerned right now, as long as we trade above 110, this currency pair is going higher. But do you see this blue line here? I'm going to do something really quick. All right, let's make this not dotted. Let's make it solid. Let's make this one dotted. Okay. Now, everybody here can see what I'm doing, right? Now, what I'm going to do is I'm going to draw this. Okay, something that looks like we could do. You know what? I'm going to do it like this. Let's do it like that. Something like this. One of these spike lows. Like looks like this, right? And let's make that solid. Okay, so we could have drawn, and I remember actually when the dollar yen broke through these lows, and I'm like, oh man, is this it? I'm asking the same question right now on the opposite side of the triangle. Here we go, breaking out. Is that it? Now, if we are looking for symmetry, this dotted line right here is more symmetrical to the bottom triangle, right? So although I believe, because stocks are moving higher, I believe the dollar yen is going to continue higher, I still have to keep an eye on this trend line. Therefore, and by the way, we stopped there today on that trend line. Do you see it? We stopped literally on that trend line today. And not to mention, it's also a 161% extension of this move. Is it 161% extension of that move? It's close to. I guess we're within striking distance. It's also a 78% retracement of this move. Let's go over to the daily chart. And let's do it like this. Let's do like this, like this, like this, that. Oh, no. I'm sorry. We want to do it like this, of this last move down. 78% retracement. Oh, no. Is it right here? Is it right there? That's a 618. Oh, it's up this one. There we go. 50% retracement of that one. What I'm just trying to point out to you guys is there's some resistance up here that we have to deal with first. What my preferred scenario with the dollar yen is going to be like this: move down here and then look for an eventual break higher of these highs. Again, as long as stocks continue higher, and the S&P looks like we're going to go to 3,400 and possibly beyond, so that seems logical. I would be, however, remember, this is me, that I have no position in the yen right now. The one thing that would worry me is if we broke back through 110. So I think this would be the biggest concern for me. If I get long down here and somehow we break below 110, that's where you get concerned. So now, for me, it looks more like a consolidation breakout, and it's a consolidation breakout, and now you just play the long side as long as we can hold above the 110, 110 level, 110.20 level. All right. And again, I hear the arguments, I hear what everybody's saying. So, and I have to imagine, why, what constitutes the yen strength anyway? It's always been an argument that I've had for well, I understand why, from all the holders of yen, long yen, I understand why it maintains its strength during periods of risk off. But if we're not in a risk off environment, then what's it doing here? Shouldn't it be higher? And that's been the argument that we've had all along. So maybe we do play a little bit of catch up. So again, while the dollar yen is above 110.30, you got to keep looking higher. This is a big move. Look at the size of the candle that we've had today. That's the biggest daily candle we've seen in a long time. I mean, we got one down here around the 108 level, but in a full-bodied candle, biggest up candle we've seen in a long time. And you've got to be respectful of it. Okay, just understand that I think resistance is up here around the 111.30s. Now, and your next question might be, well, Blake, should we be shorting it here? My answer to that question, because I know you're thinking it, so I'm going to answer it for you, is white candles or green candles, up candles that look like that usually have other up candles following it. And you can say the same thing with a black or a red candle. If you have a big red candle, they're usually followed by more red candles. So therefore, the answer to your question is, do I want to fade that right now? No, I'm just looking for places to buy it. And if I could pick it up at 111.50, 111.70 tonight, it'd be great. I just don't know if it's even going to give us that opportunity, honestly. All right, so that's what I want to talk about, the dollar yen. Big move out of the dollar yen, and you've got to be respectful of it. Unless for some reason we do a complete reversal of this intraday and we close at the lows of the day, then that's a different story. But as of right now, as it stands at 12:39 p.m. Eastern, that's where it stands. It's bullish. Okay, one other thing I want to talk about really quick. Actually, two things. One thing, though, I'll talk a little bit about the Aussie. So the Aussie is trading really off of this 10-year support, very close to support. Did you guys know that we have Australian jobs report tonight? We do, right? So we have the Australian jobs report coming out later on this evening. We have producer prices out of New Zealand, Australia, and then we have some Chinese loan information coming out. The market's expecting 10,000 jobs to be created, but I've got to argue that, in Australia, between the fires, the coronavirus, and what we may see in global growth, the Aussie is at risk of moving lower. in my opinion. We're at risk of breaking through these lows here, okay? And so if you have any, if you're watching the Aussie, I think you got to be really careful. There's been a lot of buyers down here, and you know that they've been lined up down here at the 66. Let's just call it the 66.50 level, 66.60, but it's, you know, around the 66.50, 60 level. They've been lined up. I mean, risk reward right now to buy the Aussie, I mean, you're risking 20 pips just to get long, and you're risking 20 pips to make whatever, you know, whatever you think is doable for the Aussie. But I'm going to say that the risk is that we break below that. And if we break below that, the Aussie is going to succumb to probably some pretty severe selling pressure to take us back below, you know, 65 cents. I was mentioning to somebody on Twitter that it was responding to me talking about the Aussie and the Kiwi and everything else. And you know, I remember, guys, I remember when the Aussie was down here at 50 cents. I traded it a lot. It was a, you know, 30, 40 pip trading range intraday. 20 pips sometimes it'd do 18. Most boring currency pair between that and the Kiwi was trading like a, I want to say it was a 30 handle or a low 40 handle. Yeah, it was a 30 handle down here. I mean, those were some boring moves, but I remember them because that's when I first bridged the gap between currencies or equities to currencies. And I remember I'm like, man, you know, there's not a whole lot moving here in this Aussie. But then, you know, obviously we broke out and things got really volatile as we got above parity. But what I'm trying to say is this is not uncharted territory. If we're near the peak of a really big economic expansion of, you know, 10 plus years, and this coronavirus is going to bring the global economy to, you know, a screeching halt for a couple of quarters, one of the currencies that is, and one of the countries that will be negatively impacted is going to be Australia. And so for us to trade back down towards 60 cents, I don't think that is unwarranted. Also, if you think about Australia and you think about where all countries are going to ZERP for the most part, Australia's rates are still at 3/4 basis point, you know, 0.75%. Can we drop to basically 0.25%? Could Australia try to ignite some quantitative easing in some way, shape, or form in the future, based on what the, you know, the slowdown that we're going to see in China for the next quarter, maybe 2, maybe 3? Yeah, so I think you have to be really careful with Aussie longs, especially if we get below 66.50. All right, that's going to be a pretty devastating break because technically we had a lot of traders, and not me, but I'm just going to say a lot, we're looking at this up until today. Up until today, you had a lot of traders looking at, oh, here's the head, here's an inverted head and shoulder pattern, let's play it on the long side, you know, and we're going to get a move back to, I played it long last week. I played the Aussie long. I was buying into that argument. But yeah, you know, I'm nimble. You know, I can get in and out of my positions intraday. But if you're an institutional type of person, you're, you know, buying the Aussie off of these lows, and you're like, oh, everything in China is going to be better, and, you know, things are going to, you know, continue to improve. I should be long some Aussie dollars, and I'm taking a big position here. Yeah, what if it breaks? So those are just things that I think you should think about going into tonight, into the Australian numbers. I have no Aussie exposure. Just so you guys know, I don't. I'm not going to go in shorting the Aussie dollar ahead of the jobs number, but I will tell you, post jobs report, if the Aussie comes in weak or the Aussie numbers come in weak, I'm not going to avoid not shorting it. Okay, so that's something that that I'm thinking about. Also, one last thing I need to mention: if you are a ForexAnalytix subscriber and you want to automate the patterns in play, we are beta testing that right now. So make sure you contact us through this little, you know, vehicle right here where you can talk to us through the platform, to our support staff, or send us an email at support@forexanalytix.com. You guys have a great one. Good luck tonight, and I'll see you tomorrow morning on the FACE webinar. And looks like, wait, hold on, a couple things. Yeah, Chris said, yeah, it's only premium subscribers. The reason why, because you have to have the harmonic and Elliott wave analysis because the patterns in play those, right? It won't, you know, doesn't make any sense if you don't have the analysis and you can't go, oh wow, why did it get me in? Why did it get me out? That type of thing. Gautam just wanted to ask really quick about the cable. Cable looks weak, but I think this 129 is going to offer a lot of support down here. I am not trading the cable. I thought we might be breaking above 131 in the coming days, but man, I was wrong. I was kind of waiting for it. Didn't happen. Now we're weakening again. 129 around this 129 level is going to be pretty key support, in my opinion. All right, guys. Good luck. I will talk to you soon. My name is Blake Morrow. Have a great one.